Money is everywhere, but do you really know how it works? Most people believe that banks are just a safe place to store cash. But what if I told you that keeping your money in the bank could actually be costing you? The banking system is full of secrets, and today, we're exposing them all. Stay tuned, because by the end of this video, you'll know exactly how banks profit off you and how to fight back. Truth 1. You're losing money every year. You might think that saving money in a bank is the safest option, but here's the hidden truth. Your money is actually shrinking over time. Why? One word: inflation. Inflation means that prices of everyday goods keep rising. If you had $100 today, that same $100 will buy you less in the future. The average inflation rate in the U.S. is about 2% per year, while most savings accounts offer interest rates as low as 0.05%. That means every year, you're losing 1.95% of your money's real value. Banks won't tell you this because they don't want you to look for better alternatives, like investing in assets that actually grow over time. Truth 2. Banks earn from your card transactions. Every time you swipe your debit or credit card, banks make money, but not from you directly. Instead, they charge businesses a processing fee, typically between 1% to 3% of the total sale. While it may not seem like much, these fees add up fast, and businesses often raise their prices to cover the extra cost. This means that even though you're not directly paying the fee, you're still losing money in the form of higher prices. But that's not all. Credit cards are even more profitable for banks because of high interest rates. If you carry a balance, you're not just paying interest. You're paying interest on interest, thanks to compound interest. Even worse, banks can increase your interest rate anytime with just a short notice. They send letters filled with complex legal jargon, knowing most people won't read them. This is why banks aggressively push credit cards with rewards. They want you to spend more and pay later, because that's where they make the real money. If you want to beat the system, always pay off your credit card in full every month. Truth 3. Your money in the bank is not physical. Most people assume that the money in their bank account is sitting in a vault, waiting for them to withdraw it whenever they want. But that's far from the truth. Banks operate under a system called fractional reserve banking, which means they only keep a small percentage of deposits in cash. The rest? It's loaned out to other customers for mortgages, business loans, and personal loans, earning the bank interest while you get almost nothing in return. This system works fine under normal conditions, but if too many people decide to withdraw their money at once, the bank simply won't have enough cash to give everyone. We saw this happen during the 2008 financial crisis, when people panicked and rushed to withdraw their money only to find that banks couldn't pay them. While your deposits are insured up to a certain limit, the truth remains. The money you see in your account is just numbers on a screen, and it's constantly being used to make more money, for the bank, not for you. Truth 4. Bankers are not your friends. Your bank treats you well, remembers your name, and even calls to offer special deals. But make no mistake, this is not friendship. Bank employees have sales targets, and their job is to get you to sign up for products that benefit the bank, not you. Whether it's a credit card, a loan, or an investment plan, every recommendation is carefully designed to maximize profits for the bank. A former bank employee once told me that they were trained to build relationships with customers just to earn their trust, making it easier to sell financial products. If they didn't meet their sales targets, they risked losing their jobs. Some even resorted to convincing customers to take loans they didn't need, knowing that debt means more money for the bank in the form of interest payments. Next time your friendly banker offers you something, take a step back and ask yourself, is this actually good for me or just good for the bank? Truth number 5. Foreign transaction fees will surprise you traveling abroad. Be prepared for hidden charges on every purchase you make with your card. Most banks charge a foreign transaction fee of 1% to 5% for purchases made outside the country. That may not sound like much, but if you're spending thousands of dollars on a trip, these fees can add up fast. The worst part? Banks don't always make these fees clear. Many travelers return home shocked when they check their statements and see hundreds of dollars in unexpected charges. This isn't just limited to purchases. Sometimes even ATM withdrawals come with additional fees. The good news is that some credit cards don't charge foreign transaction fees, but you have to know which ones to use. If you're planning to travel, check with your bank beforehand and consider getting a no foreign transaction fee credit card to avoid unnecessary costs. Otherwise, withdrawing cash in local currency might be a cheaper option. Either way, being informed can help you avoid giving your bank even more of your money. Truth 6. Always check your accounts for hidden fees. Many people assume their bank account is free from extra charges, but banks have mastered the art of sneaking in hidden fees. Monthly maintenance fees, overdraft fees, ATM fees, and even inactivity fees can quietly drain your balance without you even noticing. The worst part? Many of these fees aren't obvious unless you carefully check your bank statements. Some banks even rearrange transactions to make sure you overdraft, allowing them to charge hefty overdraft fees multiple times in a day. The good news is that if you catch an unauthorized charge within 90 days, banks are legally required to refund you within 48 hours. But they won't tell you this. You have to ask for it. That's why it's important to review your bank statements regularly. If you see something suspicious, don't ignore it. Call your bank and demand an explanation. Many people lose hundreds of dollars a year simply because they don't check their accounts. By being proactive, you can keep more of your hard-earned money. Truth 7. You are always being watched. Banks don't just store your money, they also track your financial behavior. Every deposit, withdrawal, or transfer you make is recorded, and if anything looks suspicious, it can be flagged for investigation. Any transaction over $10,000 is automatically reported to the IRS under federal regulations. Even if you withdraw smaller amounts frequently, your bank may still flag your account if the pattern seems unusual. This is meant to prevent illegal activities like money laundering, but it also means that your financial privacy is limited. Banks also share data with credit bureaus, meaning your spending habits and loan payments are being constantly monitored. While this system can help detect fraud, it also means that banks have a lot of control over your financial reputation. The lesson here? Always be mindful of how you use your account, because even innocent transactions can raise red flags. And if you're handling large amounts of cash, be prepared to answer questions, because when it comes to banking, nothing goes unnoticed. Banks have built a system where they always win, and the more you know, the better you can protect yourself. Now that you know these 7 hidden truths, you can make smarter financial choices and avoid falling into their traps. If this video opened your eyes, hit that like button, and if you want more eye-opening financial content, subscribe to our channel, Financial Success Hub, and turn on notifications. Thanks for watching, and we will see you in our next video.